Hi everyone, I hope you all safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy, Chapter 7, Subsidiary Books 2, Cash Book, Exercise Sum Number 1. Enter the following transactions in a single column cash book of Seshadri for May 2017. Before we are going to enter the given transaction into cash book, we are going to prepare the title of the cash book, that is in the books of Seshadri cash book, single column cash book. We already prepared the format of the single column cash book. Let's see the first transaction, that is May 1, cash in hand 40,000 rupees. So cash in hand is the opening balance of the cash book, which means balance brought down. Okay, in previous accounting period, the last accounting period, April 30, by balance carried down 40,000 rupees is brought down to the opposite account, that the opposite side, which means the debit side. The current accounting period, which means May 1, to balance brought down is 40,000 rupees. We mean it as the cash in hand. So what you have to write in the single column cash book, 2017 May 1 to balance brought down 40,000 rupees. This is the opening balance of the cash book. The next transaction is May 5, cash received from Swati 4,000 rupees. So this, whenever you see the received word or receipt received word, you are directly go to the debit side, which means receipt side. You can enter that account into the receipt side. Okay, so listen here. May 5, cash received from Swati rupees 4,000. What is the journal entry? Which means cash received means cash account data to Swati account. So where is cash account? Cash account is on debit side because cash account data. Okay, what is the opposite? So we go to debit side on the cash account, right? What is the opposite? This is just like the ledger account. This is the journal, this is the transaction. You have to imagine this transaction into the journal entry, and this you have to imagine this is the ledger account. You have post the cash account into the ledger account. Okay, so it will be easy to understand it. Okay, so cash received from Swati, the journal entry is cash account data to Swati account. Where is cash account? Cash account is on debit side. So you go to debit side, which means receipt side, dated on May 5. What is the opposite account from the cash account? Swati account. You always started with the word to on the debit side. So to Swati account 4,000 rupees. Then the next transaction is May 7, paid wages in cash rupees 2,000. So paid means payment. You can go to the payment side, dated on 2017 May 7, by wages account 2,000 rupees. So in this way you can understand in another way. Paid wages in cash. What is the journal entry? The journal entry is wages account data to cash account. This is the ledger account. You are prepare the cash account into the ledger account. Okay, so what is the journal entry? Cash account data to wages account. Where is cash account? Cash account is on credit side. So you go to credit side. What is the opposite account from the cash account? Wages account. So you go to credit side, which means payment side. What is the opposite account from the cash account? Wages account. So you always started with the word by on the credit side. So by wages account 2,000 rupees entered into the amount column. We entered it. Then May 10, purchased goods from Sasikala for cash. What is the journal entry for this? Purchases account data to cash account. This is for cash purchases. Okay, so how much rupees? 6,000 rupees. So purchases account data to cash account. Where is cash account? Cash account is on credit side. What is the opposite account from the cash account? Purchases account. So what you do? What is the date? Dated on 10. So where is cash account? Cash account is on credit side because purchases account data to cash account. Cash account is on credit side. You go to credit side. What is the opposite? Dated on 10. What is the opposite account from the purchases cash account? Purchases account. So by purchases account 6,000 rupees. In other way, purchases goods means expenses. So all expenses will be credited. Okay, payment. So you go and enter the payment column. Okay, then that means credit side. On May 15, sold goods for cash 9,000 rupees. Sold goods for cash means what is the journal entry? Cash account data to sales account, right? So where is cash account? Cash account is on debit side. What is the opposite account from the cash account? Sales account. So you go to debit side under the cash account. Dated on May 15, the opposite account is to sales account 9,000 rupees. You can think in another way. Sold goods for cash, right? So whenever you sales goods, you receive the income. So you enter the receipt side to sales account 9,000 rupees. Then May 18, purchased computer rupees 15,000. Purchased asset means expenses. All expenses will be credited. So in other way, so in credit side you have entered dated on 18 by so May 18 by computer account 15,000 rupees. Then 22 May 22 cash paid to Sabhabadi 5,000 rupees. What is the journal entry? Cash paid means payment. So you can enter this transaction into payment column credit side. Dated on May 22 by Sabhabadi account 5,000 rupees. In another way you can think May 22 cash paid to Sabhabadi 5,000 rupees. What is the journal entry? Cash paid Sabhabadi account data to cash account. Where is cash account? Cash account is on credit side. So you go to credit side dated on May 2017 May 22. What is the opposite account from the cash account? Sabhabadi account. So you go to credit side, right, by Sabhabadi account 5,000 rupees. Then May 28 paid salary rupees 2,500. Paid salary means payment. Your cash account decreases, so cash account will be credited. So paid salary means payment 2,500 rupees. So you come to payment side, which means credit side, dated on 2017 May 28 by salary account 2,500. In other way you can think paid salary means salary account data to cash account. So cash account is on credit side. On credit side you have to enter the dated on 2017 May 28. What is the opposite account from the cash account? Salary account. So by salary account 2,500 rupees. Then May 30 interest received rupees 500. So received means receipt. So you come to receipt column, which means debit column, dated on May 30 to interest account 500 rupees. In other way, interest received, what is the journal entry? Interest received through cash. Okay, so cash account data to interest received account, right? So where is cash account? Cash account is on debit side. So you take the debit side dated on May 30. What is the opposite account from the cash account? Interest account, interest received account. So to interest received account 500 rupees. Okay, in two way you can think and prepare the single column cash book. So given what are the given cash transaction you have entered into the single column cash book, then which side has the higher value? Always in cash book debit side has the higher value. How much rupees? 53,500 rupees. So you have to enter that 53,500 rupees on as the total on both debit and credit side. Okay, then which side has the lesser value? Of course, credit side has the lesser value. So you have to subtract 53,500 from the lesser value. Then you get 23,000. This is the differences. You have to enter the differences amount in the lesser value side, and balance carried down is to be entered in the credit side against the differences, and in the date column the last day of the accounting period is entered, which means May 31 by balance carried down 23,000. This is the closing balance of the cash account. Then the differences has to be brought down to the opposite side, will be entered below the total, and balance brought down is to be entered in the particular column against the differences, and in the date column the first day of the next accounting period is entered. That means to July 1. To balance brought down 23,000. This is the opening balance of the next accounting period of the cash single column cash book. So do you have any doubt? Please comment it on the comment box. Thank you. Take care.